Welcome to Legal 123s with ByrdAdatto. Legal issues simplified through real client stories and real-world experiences. Creating simplicity in 3, 2, 1.
Welcome back to another episode of Legal 123s with ByrdAdatto. I'm your host, ByrdAdatto, with my co-host, Michael Byrd.
As a business and healthcare law firm, we meet many interesting people in various stages of their business, Brad. This season, we get to focus on the high-stakes implications of selling a business. This season's theme is the Hitchhiker's Guide to M&A, and we have been guest-heavy, and today is no different.
Yeah. And for those that don't know, Michael used the word M&A. That means mergers and acquisitions, or in legal jargon, the selling of your business or selling all the assets of your business. Michael, today for the first time ever, we have 2 guests joining us live in our studio.
Okay, Brad. We need to definitely act like grown-ups today.
Yeah.
Okay, we got to impress our longtime friends with our podcast skills.
Yes, and the good news for those who are watching us on our YouTube channel, you'll notice that unlike us who have faces for radio, we could have maybe 2 TV stars in here.
The camera does not lie, Brad.
Yes, it doesn't, Michael. Well, before we bring our 2 TV stars on, when you and I, we've had this rolling conversations for years now on math and new math.
I got to be careful here as I'm going to get triggered very quickly. As you know, I have 5 kids.
Yes.
And I first learned of this phenomenon many years ago. My oldest is 26, and they got into the junior high years, and all of a sudden, the way they were taught things, or the way I was doing things was not correct, apparently. And I went on and on through kids to where now I have a philosophy that once my kids get to junior high, I'm out. So my youngest is in high school now, so my days of helping, particularly with math, are over. But I know you just recently got introduced to this.
Yes. Well, more recently, I guess, than you, because the story was Ellis, who's now 18, but the time when it happened, Ellis and I were doing math at the breakfast table, and that's when he kept telling me I was doing it wrong. Yeah. And
you did get the wrong answer, I'm sure.
No. I actually got the correct answer, and I was trying to explain to Ellis that, math was math, and that was the correct answer. But as I was explaining that, I probably was getting a little high-pitched in my voice, and my kind wife, Micah, came in and said I was doing it wrong because I wasn't using the Singapore method or technique or whatever the new language of math is. So I actually was very happy to know that I stopped and excused myself from the table because I was one of those dumb traditionalist mathist persons who could still get it right, but clearly did not apparently. Well, the mathist left me behind, even though I got the correct answer.
You did what I did, and probably what every dad has done was you bailed. Yeah.
No.
So,
no.
And I have to say, Brad, if I hadn't experienced the same thing myself, I would not trust you at all with this story and just believe you were not capable of doing the math. But I've been there 5 times and done that, and it is so confusing and so maddening, and but I am curious where you're going with this whole math talk.
So we can all agree that getting the correct answer, to a math problem, I get that matters, but apparently you have to learn how to get there, and there's actually apparently some wrong techniques now that you can use, which I guess depending on your perspective can be very painful. It's painful for me to try to learn this new technique, but as I was learned, math is math. And when I was preparing for today's show, I was thinking about our 2 guests and their company. And they look at revenue numbers and profitabilities numbers, and they help determine their clients if they have the correct answer. And more importantly, when I started really deep diving on this, what technique do they use to get there? And can they help improve their client's business, even if math is math?
You really stretch yourself today, Brad. Yeah. Your creativity knows no bounds to talk about math when we have 2 accountants coming on.
Yes.
Okay, well with them being...
Yeah, go ahead.
With them being live in studio, I was hoping for a little more dazzle from you, but
sorry.
I know your limitations, so it's okay.
All right,
it's okay.
Well, perfect. Well, let's bring them on since we keep referencing them.
Okay, we have Jessica Nunn and Christin Trujillo from Maven today. Yes. I'm going to introduce the stats for both of them. Jessica is founder of Maven. Her job is to make the complex world of revenue, profitability, and key performance indicators, or KPIs as they say on the streets, clear and simple. Jessica started her career in Big Four accounting firms and middle market accounting firms. We will not talk about our undergrads. She has dual degrees from Texas A&M, and I'm not saying anything about it other than A&M is playing Texas in 2024. She has a bachelor in business administration and master's of science in finance. In her spare time, Jessica enjoys reading, yoga, spending time with her husband. We'll talk more about what spare time means, but and shuffling her 2 kids around. And most importantly, this is her second time to join us on our podcast. First time in studio. Christin is a partner at Maven. She is a background financial consultant who helps with aesthetic, dental, healthcare practices, and small business owners alike to help them understand their businesses from the inside out. Prior to Maven, Christin worked successfully consulting top multi-billion-dollar organizations to better financial and operational performance and drive multi-million-dollar growth. Her unique experience allows her to provide practice and business owners top-level financial oversight without having a full-time in-house CFO. Christin comes from 4 generations of small business owners, and so she knows deeply that financial success means supporting families and communities. She is a University of Kentucky grad, and we have had many conversations over the years about this. Bachelor's degree in community communications and leadership development. Christin enjoys being a mom. She takes her daughters on walks with the dog and stroller, cheers on her Kentucky Wildcats, and apparently searched for new brunch spots. This is welcome to both of you.
Thank you.
Thank you.
We're happy to be here.
Well, awesome. Well, obviously, Jessica, Christin, the first question I was thinking about, when you're using your math skills for your clients, do you use the Singapore technique or traditional math?
I was going to say, you think Singapore technique is hard? Wait till you hear about accounting math. And you know that's not easy.
No, that doesn't even sound easy.
No, most people, almost everybody hates it. It takes a real special person to enjoy accounting math.
Is that college level? I'm having some flashbacks in my accounting at undergrad.
Yeah, those are the memories you wish to forget.
Excellent. Very good. Well, I guess just to start, we'd love to hear a little bit about Maven. Introduce our audience to Maven.
Yeah, we consider ourselves CFOs for aesthetic and healthcare practices. We help our clients who also hate accounting math usually understand what's going on in their business from a financial perspective. So what's coming in, what's going out, what's driving your revenue, are your expenses in line, and what can we expect for cash flow?
And if you think about, the average large organization, they usually have a financial team. There is a bookkeeper. There's someone that does the taxes. There's a CPA. But what we do is we act as the CFO. A lot of these huge organizations, they have a CFO. That's the senior most, that's the senior financial person. And the difference between the bookkeeper and the CPA and the CFO, well, the bookkeeper, they're really concerned with categorizing the books, preparing the financials. They're not really giving you a lot of advice. The CPA, if they're giving you advice, they're looking in the rearview mirror and they're really focused on what happened last year. And then the CFO, we are looking forward. So what has happened? Let's really advise you forward. And that's what we're doing for our clients.
I heard it yesterday. Someone said a CPA oftentimes will tell you where the hockey puck is today or where it's been, but we're helping to describe where's the hockey puck going, right? Where are we taking where are we taking the business, and what's the financial plan?
Yeah, makes sense. And I guess using your accounting math a little bit in there too, Jessica. Well, and the last time we had you on was a couple seasons ago. So tell us what's been going on with Maven since the last time you were up here.
Well, we've grown a lot.
Yeah.
We have 10 folks. We have consultants. We have financial analysts. We have a whole team that helps our clients out. So when clients work with us, they're working with a team that's supporting them in different capacities. We've grown a lot, as you guys know, in the medical aesthetic space, which has been exciting. It's currently about 52% of our business.
Wow.
While we love all healthcare businesses, it's been really fun to participate in the growth of this industry. So we've loved that.
Super cool. Well, Michael, in other shows so far this season, we've talked about the seasons of business. And for our audience members who might be listening for the very first time, why don't you give a quick recap as to what are the seasons of a business?
Brad, I've been waiting for you to ask me to provide context. I've got to.
Yes.
I've got to.
Mr. Context.
Yes. So, yeah, I mean, our premise this whole season as we focus on M&A is that every business is in one of 4 seasons of a business, and all of those seasons impact when you ultimately sell, the things you do during those seasons. And so we talk about the building season, the operating season, the scaling season, and of course the buying and selling season. And then, when we kind of double click into the selling season, we talk about the 5 phases of an M&A deal and just how important it is to understand the process. But, as we kind of shift and bring on Jessica and Christin, we'd love for you guys to talk to us. Let's start with the building season. This is the infrastructure time. They're starting their business. What should our audience be thinking of if they're in that initial season of starting their business?
Well, we like to always encourage, as you know, a plan.
Oh.
Mm-hmm.
That's
we think it's
interesting.
It's best to really think through, what is your business going to be about, right? Let's not just start it and run it blind, but you'd be surprised at how many folks do that. Right? They just, they're succeeding almost in spite of themselves and in spite of their lack of a plan. So we really, from the get-go, encourage a plan. We, when we start working with clients, their business is an idea in their brain. But how do they take that idea and turn it into something that can actually give them a paycheck? That just doesn't happen. It takes some foresight. It takes some thought. It takes some careful planning.
Yeah, and whenever we're working with clients specifically on the financial side, we want to map out a realistic plan financially. Well, what can we expect for revenue? What are we going to anticipate for expenses? If we're going to have to invest in a build out, we're going to need furnishings and fixtures. There's a lot of things that we have to consider that have financial implications whenever we're mapping out this plan. And 9 times out of 10, if it's prior to opening, that budget is going to change 1 month in. It's going to change 3 months in. It's going to change 6 months in. So it's really ideal that we have this rolling budget, this rolling plan that we are evolving as we learn, as we grow, as we get things established. But, if you are starting your business and you're in the building phase, you definitely need to have a plan, but you need to set up your business appropriately. You need to go ahead and get your books in order. You need to have someone prepare your financials on a monthly basis. You need to be looking at if it's 6 months down the road and you opened 6 months ago, it might be too late to do a course correction. You could have already lost $100,000, maybe $20,000, but there's a lot of mistakes that have dollars tied to it that you can make if you don't have this plan.
And so when you're helping develop these business plans, is there 1 or 2 things that you're like, this is repeatable, and no matter what business that they go into, that before you open the doors inside your business plan, it should be, these are the 2 or 3 things you have to focus on, no matter what industry you fall into?
Well, I would say being clear about what kind of team you need, right? Who should you have on your team, not only internally, but externally. So internally, who are you going to hire and when, because you guys know that's a big challenge right now, is finding the right people on your team. So you can't wake up and say, oh, shoot, I need an office manager yesterday. You have to really think about that. So everyone needs to think about staffing, but also your external team, right? Surrounding yourself with a good accountant, with a good attorney, with the whole team that you need to succeed. We're working with someone, I just got a call in today who, they're about a year in, and it turns out their accounting team really just has been providing them bad information. Well, now they have to start over, right? And they've made decisions based on this bad information.
Yeah.
So it would have been nice if we would have been involved earlier on, so we could have said, stop. This is not okay. You have bad people on your team who are giving you bad information that you're making bad decisions with, right? So,
do you guys help business owners, with the kind of the planning with whatever startup capital they have, and how do they make mean, I think there's a common mistake of knowing that when you open the doors, you don't start making cash on day one.
Oh, for sure. Yeah. No, we really map out and plan for how much will you need? What are you going to spend down to, what are your monthly costs going to be the first 6 months? What are they going to be before you even open? You guys know there's a lot of money to be spent before the doors even open.
Right.
So how do we get a handle of that? How do we get a handle also on what you need to take home to live?
Yeah.
And then how are you going to fund that? So most folks start talking to banks, and the banks, the first thing that they say is, well, how much are you going to need?
Yeah.
Right. And if you're guessing, that could be a pretty big mistake. So, getting clear with exactly how much you're going to need to borrow or invest to get yourself kicked off the road, and, to get it to where you don't have to potentially make bad decisions because you've run out of money, right? The fear of running out of money can keep you from doing the things that you should be doing to make your business successful.
Right. Excellent. And I'm going to shift one last thing because, Christian, you mentioned getting your bookkeeping done correctly at the beginning. And I know that's kind of the role of a bookkeeper, but talk a little bit about, what is bookkeeping for the business owner that is starting up, how paint the picture of what that is and what that looks like.
Yeah, so bookkeeping, that's the preparation of your financial statements. The two most common ones being your P&L, your profit and loss, and your balance sheet. So the P&L, what that shows you, that's all of the money that's coming into the practice. That's all of the operational expenses that are going out of the practice. And then the balance sheet, that's a summary of your assets, your liability, and your equity. So if you take out a loan to start this practice, the payments are going to be recorded on the balance sheet. So it's really important that you're able to see, well, what's the cash into my practice? What's the cash going out operationally? Payroll, advertising, insurance, rent, all of these fixed expenses. And then also, are there any cash flow considerations that are not hitting the P&L? Hey, I finance some furnishings and fixtures. Hey, I finance the build out. Well, that is going to hit on the balance sheet. So really looking at these things and understanding, well, on a monthly basis, I am making X, I am spending Y, and then I'm also paying these loan payments. So that's going to leave me with my cash flow. And then I'm going to be able to understand that. So it's important to do that immediately because, like I said, if you wait 6 months, there could be a lot of opportunities that you just are not looking at. You're not seeing.
Yeah.
And I think a lot of folks will want to do their bookkeeping themselves.
Yes.
I'm sure you guys have heard that, right?
Yes.
And they'll say, why would I spend money on a bookkeeper when it's just QuickBooks? It's just coding the transactions, right? And we've seen it so many times where, their transactions are coded incorrectly, or we'll look at their balance sheet and we'll say, well, where are your loans? We have one we looked at yesterday that, according to their QuickBooks file, had negative $288,000 in cash. So when we say, hey, feels like a problem, you're negative $288,000. And they're like, oh, no, that's not right. That tells us that something is missing, right? Somehow we're off.
Well, that goes back to being your job, being the outside CFO for them. If they have bad numbers being put in,
that's right.
It's going to affect everything else. And obviously then you have to go back and clean it up. But
that's right.
That kind of falls as we're moving. We've built it up. We have their first. They put the big business plan together. But now they're operational. And during the operations season, this is where they're trying to focus on the performance of the business. I got the doors open. I've got some staff in there. Now, during the season, what should a business owner focus on to help keep their house in order?
Well, ideally, they've got a great plan. So they know exactly where they should be. Like all of our clients know exactly how much money should be in their checking account every month. So they've got a great plan. They know if they're sticking to the plan or not, right? Because they've built this plan out. So once you've designed your practice by way of a financial plan, then in the running of the business phase, let's compare that. Let's tweak it. You guys know in life and in business, something always comes up. Just when you think you've got everything settled, right? You've heard the thing that's like, this next week, I'm finally going to be caught up. And then turns out something else happens. So it's the constant review of the plan. It's the constant tweaking of the plan. It's the constant staying on top of the numbers. You can't take your eye off the ball just because you're kind of in smooth sailing mode.
So speaking of that, how often should people look at numbers?
Oh, great question. Yeah. So we recommend every month, right? Like your amazing bookkeeper that you've hired that's keeping your QuickBooks, not yourself, but your actual accountant, is going to put together the financials. So those should be done ideally the middle of the month following the month that you're reviewing, right? Ideally, you've got a CFO or someone who's helping you on the finance side do what we call pull your KPIs. So it's a whole thing.
Fancy.
They need to be like pulling the data that's meaningful to your business. So, we can go into that and talk about what that might be for aesthetics or for healthcare practices. But I would say reviewing your financials, reviewing your KPIs every month. How do they correlate? Are they in line with what you thought would be happening, with what you wanted to be happening? If not, let's tweak. But if you want to say, hire someone or invest in some equipment, you have to know where you are today to be able to predict whether you can afford that or that purchase makes sense for your business.
And, thinking about the KPIs and thinking about that business plan, we work with dozens and dozens and dozens of medical spas. We work with dozens of aesthetic practices, dozens of plastic surgery centers. They are all different, every single one of them. So it depends on what services you're offering, what treatments you're going to be providing, how many providers that you have that are doing these types of treatments. So whenever we analyze these things, whenever we're looking at this, whenever we're creating the plan, we like to encompass and really think about all of those different factors, because there's going to be a different output. So we just do not treat every single medical spa exactly the same. I need to know, well, how many providers are we going to have doing this? Are we going to have lasers? Are we going to have spa services? Are we going to do primarily injectables? That changes the whole entire makeup of the business. So it's really important that, whenever you're going into this plan, you're really considering all of these things. And the KPIs look different, especially if you're doing certain treatments versus other treatments on the surgical side too.
My observation is I know clients who have these disciplines in place, and you ask them a question about their business, they usually give you a really specific answer about how the business is doing. And when they don't, oftentimes the answer is very vague or I don't know. And it's super common. You can have a really successful practice and they don't really know what or why things are happening.
Well, I'll tell you that they oftentimes have a gut feeling.
Yeah.
And we'll say, oh gosh, you have 3 providers. One is amazing. What's going on with these 2? And they'll say, I knew that. I felt it and I knew it, but now you're showing it to me in the numbers. Doesn't make me feel better, right? But at least now I know for sure that what I suspected to be true, in fact, is true. But then we can say, but now we know why, right? These 2 aren't busy. Why aren't they busy? Let's work to get them busy. What do we need to do to make all of your KPIs be where they should be in order to generate the profitability you need to generate? So it is interesting how they kind of know.
When especially, we've seen this before, and I think you were kind of referencing this, Christin, was they're doing so well and they don't really know why. And yet if you, as we know with right now with the economy kind of being tightened, focusing on where you're doing well is essential, and understanding how your KPIs is different than your buddy Bob down the block, because they may be a commercial-based business and you're a cash-based business, or vice versa. That's a huge difference of knowing that provider, we need to accelerate them, and then we got to get these other 2 to do better.
Yeah, I mean, you've got to really know the specifics if you're going to do better, right? Understand your opportunities. Where we always say, a business owner has thousands of things to worry about, right? You got 99 problems at least, right? How can we identify the ones that if you focus on will truly move the needle? Yeah. So we love to say, like, listen, this is going great. This is going great. This is going great. You don't need to worry about these things right now.
Right.
What you do need to worry about are these 3 things. So I want you to focus on these 3 things. We're going to put these on your scorecard. We're going to measure these 3 things specifically for you so that you can keep an eye on what you really need to improve. We're not going to lose sight of what's going great, but I don't need you to focus your energy over here because that's working.
Yeah.
That's awesome.
She kept staring at you on things to improve. I saw that, Jessica.
Yeah, I know. But, she was just signaling to me she understands what I go through with you, Brad. So as we're getting near our end, I can't believe this is flying by. I have a final question for each of you. So one of you, and you guys can choose, can talk about things that for clients to think of when they're in that scaling season, and what are the things to consider and be thinking about to kind of keep their house in order. And then the other can answer, like, when we finally get to that buying and selling season, what are, some things from, y'all's view of the world that they should be focusing on.
Oh, me, this is my favorite.
Oh, all right. I like favorites.
Yes. So whenever you're thinking about scaling, we talked about earlier, it's so important to do some of these foundational things. You need to have good bookkeeping. You need to have your house in order. So whenever you're scaling, as far as, if your end goal is to exit, it is to sell, you want to really bulk up that bottom line. You really want to increase the EBITDA. What does that look like? I see a lot of my clients, they talk and they compare themselves via the top line. Mm-hmm. And I have a lot of practices that have similar top lines, but their bottom lines are drastically different. Mm-hmm. So why is that? Is it because of the cost of goods sold, the supply cost? Are the margins appropriate with the treatments versus, what you're paying for these products and these supplies? Is there an opportunity to adjust there? Are you just sitting on a lot of inventory and that's reducing your profitability? So really having control over a lot of these things, having a budget is very important if you're looking to scale, if you're looking to grow. I've got a lot of clients that just want to have one really good practice, and I've got some clients, they want to keep on adding. Mm-hmm. They want to acquire, other practices, or they want to do, they want to have de novos. They want to take what they've created and replicate it and mm-hmm. open a second and a third. Well, if you're in that mindset of opening that second and third, you do need to have really good standards and really good processes in this first location. You need to be budgeting all of these things. You need to have a good control on your payroll. Are your providers really optimized to produce the revenue and keep that payroll cost down? So, if there's a couple of areas that I see really get out of whack that reduce that profitability, it's definitely payroll. If it's just not optimized, it's definitely cost of goods sold. If you're over inventory, if you are losing products somehow, if you are not budgeting, if you're just purchasing too much, if your margins are not appropriate, some of the fixed expenses can get out of whack. Sometimes they are what they are. You can't necessarily change your rent. Right. So that is what it is. But how do you optimize your space? How do you make enough revenue to pull that percentage of rent spend down? And that's something that we really work with a lot of our clients that, their end goal is to scale. And hey, I want to open my second and third location. Well, we need to build up a lot of cash flow. And then once we open that second and third location, we have some, capital injections that we can make in addition to getting a loan. And then we really got to tighten all the bolts. So how do we really get operational here?
Awesome.
We're ready to buy or sell that business. What should they have done?
To Kristin's point, like when you've grown that top line so large, every 1% matters, right? So how can you tighten your ship? Because if you think about adding 1% to your EBITDA, and there's a multiple that goes on to that, that decision that tightens up your inventory just a little bit, or tightens up your payroll just a little bit, is going to mean potentially millions of dollars. So I would say if you're thinking about selling or, it's on your mind, and something that's exciting, kind of on a sidetrack that I talked about yesterday a little bit, was that I would say a few years ago, don't you guys think that these med spa owners and plastic surgery practices didn't think that selling was in the cards for them? They didn't really understand that this was a potential. Yes. Yep. And now we're talking to folks who are like, oh, that's a thing.
Yeah.
Yeah.
So now that we're understanding that that's a thing, right, then we need to back up a bit. How do we get the most in value? Yes. And I really think it's with what Kristin said, like tighten it up, right?
Yeah.
Become as profitable as you can. Focus on that bottom line because that's what counts in the end.
Not using the gut math method that you mentioned.
Yeah, no Singapore math over here.
Okay. All right. Well, I can't believe it. We're out of time. We're so grateful that you agreed to join us. And yes. I'm really proud of Brad. Riley, get him a cookie. He behaved himself today.
So good.
We are going to say goodbye and then go to a commercial. And on the other side, we'll do a quick legal wrap up.
Thank you, guys.
Thank you.
Thanks.
Many business owners use legal counsel as a last resort rather than as a proactive tool that can further their success. Why? For most, it's the fear of unknown legal costs. ByrdAdatto's Access Plus program makes it possible for you to get the ongoing legal assistance you need for one predictable monthly fee. That gives you unlimited phone and email access to the legal team, so you can receive feedback on legal concerns as they arise. Access Plus, a smarter, simpler way to access legal services. Find out more. Visit ByrdAdatto.com today.
Welcome back to Legal 123s with ByrdAdatto. I'm your host, ByrdAdatto, with my co-host, Michael Byrd. Now, Michael, this season, our theme is The Hitchhiker's Guide to M&A. And today's show, we did focus in a roundabout way on M&A, but really by looking at different seasons of business, by having this outside or fractional CFO perspective with Jessica and Christin in here from Maven. And really, their theme really was getting your house in order by basically doing it right, really the first time. But, what are some, besides number talk, I guess we heard with them, what are some important takeaways you have right now?
Yeah, I really, what resonated with me was when we started at the end talking about the scaling and selling season, their central message was all about really zeroing in and being intentional with your numbers because of the impact that has on EBITDA, which has an impact on your valuation. And it reminds me that when you're in this scaling season, that we've worked with Maven and other planners, and they sometimes like when you're scaling to form multiple new entities as a part of that story and a part of being able to really accurately track the expenses so that they're kind of meeting that objective they talked about to best prepare you for sale. And that is a consideration when you're scaling is how is the legal structure impacted? What do the CFOs think, and how does that impact potential legal structure? And of course, there's many other considerations that we as attorneys go through on strategy.
Sure. I mean, and just jumping in real quick there, Michael, is obviously there's regulatory implications, there's structural issues that you have, there's ownership and governing documents that need to be modified. Obviously there's tax impacts. So there, it's great from an accounting perspective, but like everything else, and I think Jessica said this in the beginning, having all your team involved will help when you're in that scaling. So the legal and the accounting and the financial planning is all done together so that you have the good end result, so that, going back to our theme, you have a great business ready to be sold. But Michael, that's all we got today. Audience members, believe it or not, we got one more episode coming up next week. We have a surprise guest. I'm super excited about this person who's really going to talk about it from the seller side of an M&A deal. Thanks again for joining us today. And remember, if you like this episode, please subscribe. Make sure to give us a 5-star rating and share with your friends.
You can also sign up for the ByrdAdatto newsletter by going to our website at ByrdAdatto.com.
ByrdAdatto is providing this podcast as a public service. This podcast is for educational purposes only. This podcast does not constitute legal advice, nor does it establish an attorney-client relationship. Reference to any specific product or entity does not constitute an endorsement or recommendation by ByrdAdatto. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. Please consult with an attorney on your legal issues.